All right, I will speak normal. When every Sunday we do our trade planning session in SpyGlass, we meet at 7 o'clock London time or 8 o'clock Greenwich Mean Time, and we spend 2 hours with each other with the team of traders that we have, planning our trades for the following day, or for the following week actually. And one of the interesting things that happened last night was that we had, for the first time in a very long time, we had a big gap up in the euro pairs, and we have seen that there has been a very big move to the upside in the euro overnight, and but anyway, we had this big kind of a news event, as I said, that they were saying that because of the bailout of Greece, then the euro is going to appreciate, and the traders were looking for a big move of appreciation in the euro. So what I'm going to share with you today, because this is such a unique event, and it's an important event, and it's one of the ways for all of us to capitalize on our trading, I want you to see here that the position that I have open right now is short the euro CAD, and I'm also short the Australian dollar. And the reason is, we had some good news coming out of the euro, and all of you, and you have seen on all the sites that everybody is saying that this is a good opportunity for the euro, and that's the reason, because the euro they're going to bail out Greece, and that's why that's good news for the euro. And thus far, the euro should move higher. And it did gap overnight. We had about 150 to 200 pip gap up. So the way we trade this situation, guys, is this. We do not, once the news comes out, and I have a unique event, I have now an event that the euro is getting a reprieve after this big sell-off that it has been going through for the last couple of months or so, based on but the idea is, whenever we have a news event, whenever we have something in the market that is as prevalent, that's all in the news, every TV station that you open up, every news channel that you look at, everybody's talking about the bailout of Greece, and every analyst is out there saying how good it is for the euro and how positive it is for the euro, and everybody's expecting a big move in the euro dollar. Now, we as traders, we do not care if they are bailing out Greece. We do not care if they are going to cover all its debt, whatever the news is, however positive that news is. What we do as traders is that we look at the chart. So basically what we're going to do is we're going to look at the chart, and we try to see the effect of the news. If I am getting the same kind of movement that I expect, if I'm getting the same kind of movement that I expect from the news, that means I am looking for a big move to the upside. Are you waiting at
Yeah, I need a good money manager. Okay, I can't help you there. All right, guys, let's see if we can put but anyway, I'm going to discuss with you today, as I've been saying, I'm just going to hide these for a second. Yesterday night we had a big news event, and if you look at the daily chart, you can see that in the overnight, actually the euro just gapped up. I mean, the close for Friday was 134.98, and we opened the next day, or Sunday night, at 136.58, we had about 150 or 160 pips gap to the upside, which is, as you well know, all of you as experienced traders, it is a very rare event when it comes to foreign exchange that we have such a gap. And it continued, the gap continued in the overnight for some time. Now, this here on the intraday chart, you can see the gap. And we had all this kind of sideways movement in the Tokyo session and in this is the London session, and now this is the New York session. Now I'm going. Can you guys see the charts or not? Can you guys see the charts? I mean, I see. I'll tell you what, hold your questions for 10, 15 minutes. I'm going to answer them, but let's get the presentation going, and then I'm going to answer your questions, okay? Lovely. So what happened in the overnight is you had this gap up in the overnight. You would see that the prices have, this was the close of Friday. That was the move, the gap up. And this is, as I said, is an extremely rare event in the foreign exchange. And of course, with that, we have to be aware, or some of us started asking, and this morning, you saw all the news events and all the news channels and the media, everybody's talking about the bailout, the Greece bailout, and this is what's going to happen to the euro and all that stuff. This is the reason behind the gap in the euro. But for us as traders, and I'm going to teach you now one of the techniques that we use every single day whenever we have a news event. The basic technique is that once the news event comes out, once we know why something has happened, okay, then we are going to wait. Listen to what I'm saying now. We are going to wait for about ballpark. I'm just giving you a ballpark. We have much more specific time because we use our software that gives us a little bit more specific time. But you're going to wait for about 20 minutes or so. And after the 20 minutes, you're going to look at the charts and you're going to make a judgment call. So right here, this was the news event. This is when the news came out. Right here where I have the arrow. And that is the period of about 20 minutes or half an hour. And if it's something as specific and as strong as the Greek bailout, you just have to give it, as I said, we gave it about a 45 minutes or an hour because this is such a major event and we need to make a judgment call. So guys, let me ask you a question. And this is how we use price behavior in trading the news and trading the market. We don't use any indicators and blah, blah, blah. We don't use that stuff. We are using the price action and common sense in understanding the market and how the traders behave and how we make money out. So I'm going to ask you a question and I want you guys to answer it yourself because I lost some time. Now, if you are short the euro dollar and you heard that the news event, everybody on the news saying that they are bailing Greece and the euro should be flying up. It already gapped up while everybody was sleeping. We were all sleeping when it gapped up. And now when we woke up, this here is the move. This exactly, those 20 pips That's the move as the result of the bailout of Greece. Now you begin to ask yourself, we have this good news now. What do we expect to see in the market? What do I expect to see if they're bailing Greece? If the euro, the problem of the euro should be solved, quote unquote. If the eurozone is getting back in line and they're sorting themselves out, what should I expect to see happen to the euro dollar? The common sense answer is this thing should be flying. If it gapped up, exactly, Fib. If it gaps up, absolutely. So this is the rule. I'm going to write it. I teach this in the class. Exactly. So this is the rule, guys. I'm going to say it quickly, and this is the rule. I'm going to write it down, and I'm doing this especially for you. And this is one of the things we teach in the class, but the rule is, if you're going to make a judgment on the news, hold on, Jiggy, I'm going to teach you something, so listen. Okay? So the news is, if I have good news, and I look at the chart, and this kind of action, what kind of action is this? If it's good action, this means I am looking for it. Good action, if it's good news, I'm looking for good action, i.e. I am looking for continuation to the upside. I am looking for momentum. I'm looking for high speed. I am looking for something to confirm that the market is accepting this good news. If that's the case, and I see this action, whether it's a pullback or not, it doesn't make any difference. You're not going to wait for a pullback, because if it's really good action, you will not get a second chance to get into the trade. But if that's the case, then you are going to buy. It's going to be a little bit of high risk. It's going to be a little bit of volatility, but you're going to buy. But if you have good news, and as in this case, we're not getting any follow through to the upside, we're getting bad action, i.e. we're not getting an action that confirms the move, then without thinking, without wasting our time, then our bias is to initiate a sell. We are going to go short because that initial move has exasperated it or has satisfied the move, and now common sense is coming back into the market. The traders are not buying back. They are not covering their shorts. They are staying into the trade. So our position is to, right now, to go to sell or to go short. And now I'm going to show you the chart. And this is a trade again. And this is what we call the market side as part of our software. It is not a moving average. It is session unique. It begins from one session and it ends, and then it begins in the following session. If the prices come and trade below the market side, this means now if the prices are above the market side, what that means is that our bias is to be long and not to look to go short, because they are lifting the ask. They are buying it at the ask. When the market is above the market side, this means they are buying at the ask. Every time you see a bid and ask, they are taking it at the ask. That would encourage the prices to continue higher. And right there, if it comes below the market side, right there, now this rule comes into play. I had good news, gapped up. There was nothing, no movement to the upside, for the last couple of hours. And then it came below the market side. So I'm having good news and I'm having bad action into the market. So as a trader, that's our job. We have to trade that. So we have to go short. And that is your trade. And you stay with it. And the more it stays, the weaker it gets. And that's it. And as of now, going forward for today and this afternoon, we should be continuing to stay short the euro, because now, even though they had the bailout, that is still continuing to the downside. And that trade, guys, you would have been short at 56, 136.56. It is now trading at 135.80. That's about 75 pips on that move. Okay? I'm already short here from the morning. I took short the EuroCAD. In the morning, we were trading the London session here. I took the EuroCAD and I took the Aussie dollar. And I want to show you what happened in the EuroCAD. And these are all live trades. This is the live account. So I don't, in the trading room that we have, I always, and all the traders over here, we always trade live, no demo, no simulation. If we make money, we lose money. At least you see exactly what we're doing. And look at the EuroCAD, and you will have a much clearer signal. I mean, this was one session, so we had the previous session before. You can see that this is the gap up that we had in the EuroCAD. It put a high of 137.50, and basically after that it kind of paused. Okay, I'm just getting the data down. For some reason the internet is kind of a little bit. But again, whenever we are trading, we are going to look at your the news event. You're looking at whatever happens in the instrument that is affected by the news, and you're going to make a judgment call. If you're getting bad action to the news, then you're going to take a counter trend or a counter news trade. If the news is good and the market is not responding as per your expectation of that news, then you are going to trade in the opposite direction. I have no idea why the data is so slow. I'm with you with the internet. Let's see another pair. Maybe I can show you another pair. Let's say the Euro Yen. Now, we are going, again, one of the tools that, again, I just have to wait until the data comes up so I can show you a chart, but one of the tools that we have in order to gauge the market, okay, that is the Euro Yen. The same situation, guys, in the Euro Yen as what I've showed you in the Euro Dollar. This is the gap up in the Euro Yen. Because everybody, this is not the Euro Dollar, this is the Euro Yen. This is the chart for the Euro Yen. That is your gap up. For the following hour or so, the market moved sideways, doing nothing. We had one push up, so we would be buying it right there, because that means that now this is a buy signal. Right here, this is a buy signal, and I'm looking for the market to continue up, and I'm looking for it to move much higher. If it turns around like this and it comes back inside or below the market side right there, that to me tells me that I am not getting the follow through that I'm expecting on my trade. I bought the news event where I have the arrow. It did not work. There was no follow through to the upside. As soon as it gets okay, I will come back. I mean, yes, I mean, I will come back and gladly do that for you, Coco. Okay? Then we are going to, right there, we're going to go and take it. Sure. Okay, so I think let me do that. I think because as I said, we're running. So let me qualify back the news for. Okay, this is one of the techniques that we use here at SpyGlass, and this is what we used to use on the floor and the hedge fund. Whenever a news event comes out, and again, trading is simple, Coco, and it's common sense. Okay, there is no qualifiers. I mean, we you can use this as a way to make an actual living based on what the rule that I'm going to teach you right now. Okay, I will give you an example for something different. How many times did you see a news event come out? Let's say the GDP is up 5%, or the trade balance has gone up, or we are making much more money, or the interest rate has gone up. Let me give you a good example. This is a live example. In February last month, we know that the Royal Bank of Australia has raised the interest rate. That was on March the 2nd this year. Do you remember that? Okay. So let me put the Australian dollar, and in not this last increase in price, but the one before it in March, they came up, and I think it was trading at 92.50. This is a trade that we did, and I'll show you because we were trading it. And if I go to March 1st, you would remember that they have, where is March? Okay, here's February. I think it was the second. Yeah, it was somewhere on this day. And this here was, I think, where they raised the interest rate 25 basis points. Now, let me ask you, Coco, and I'm going to talk with you, and you answer me back yes or no, and all of you guys share with us, but I'm going to wait just for Coco's answer. If they raise the interest rate 25 basis points, Coco, is this good news for the Australian dollar or bad news? Absolutely. It's good news. So if they raise the interest rate for the Australian dollar by 25 basis points, we are going, as traders, we are going to estimate if they raise the interest rate 25 basis points, then the Australian dollar should go up. Ballpark, you don't have to be precise. You're just doing this number so that you have a reference point in your head. If they raise its interest rate, then how much would the Australian dollar go up? 25 pips? 50 pips? 50 pips. Fantastic. Okay, that's fine then. So now, right here, that is, I think it's the second or the third. Yeah, right there. That was the day. Then they raised the interest rate. And so we're looking at the price action. Let me show you that today, right there. This is where they raised. It is actually this was the day right there, and you can check it. It was March the 3rd, and we were trading. It doesn't matter, Harry, Dan. I mean, you're ballparking. You are ballparking it. Okay, that's all what you need. You need to get a reference. So you're looking for about, let's say, from 35 to 50 basis points. You're looking for 50 pips. This is what happened. This is where they raised the interest rate. That is, as you can see, that this is around midnight London time. So this means it's about 7 o'clock Australian in the morning, or 8 o'clock in the morning Australia time. They raised the interest rate, and that was the move. I mean, before the interest rate, the Australian dollar rallied. Once the interest rate was raised, it moved from 90.50 ballpark to 90.61, 90.60, 90. So this means we had good news, Coco. We're looking for this thing to go up. Now we're ready to buy. We're waiting for the first 30 minutes, 40 minutes to get our move, to get the confirmation that the market is moving into the direction of the good news. If it fails and it comes back and instead of going up, it moves sideways or comes down. So if I have good news, then I need to see up move. I need to see momentum. I need to see action to the upside. If I have good news and I get sideways action, that means it is equal to bad action. Anything other than up move, anything other than momentum, anything other than move to the upside, if the news is good, and we are all smart people, we can quantify how good is good and how bad is bad, and we base a judgment. And the simple technique, we spend a whole day in the classroom here in the course teaching people how to trade the news by actually going and trading the New York Open, trading the unemployment, trading the monthly. We sit here and we actually do this live with everybody taking the trades. Why? Because we have to train you on this judgment call. But anyway, and then we take the trade. So right here, below the 90.40, what kind of, if the market opens here, right here where I have the arrow, this is the unemployment here at 90.50. I'm sorry, not the unemployment. The interest rate, they raised the interest rate, and all what I get is 20 pips. And then it starts coming down to 90.50, and it comes below the market side. You see the market side? Once it comes below the market side, when the prices trade below the market side, this means that they are hitting the bid. The market side is an indicator that tells us if they are lifting the ask, i.e. they are buying. When you buy, you pay the ask. When you're selling, you are hitting the bid. Okay? So if it's below the market side, this means that they are hitting the bid. This means that they are selling. This indicator is what we call the market side. This is this is the market side. You see this dash? Let me finish this trade, Arsh, and I'll show you. Now this means they are hitting the bid. So now we want to be sellers. So right now, if you come here, even though the Royal Bank of Australia has raised the interest rate, and everybody is gung-ho on buying the Australian dollar, you would take it right there. You will go short at 90.40. And this is a trade because this is when I was trading with the guys in Bloomberg when we were in Mexico doing the institutions. We took this trade. And as you see, that is your move. It took us all the way down. It was again basically kind of volatile, but you took 50 pips on that trade. And even though you might not be one of your best trades, or you're too excited to buy, but at least it would stop you from buying. Okay? And you had 50 pips on the trade, $500 sitting doing nothing. The same thing, the same trade, guys, that I'm explaining to you, I'm doing it right in front of you. Coco, look at you guys in front of you. Look at this here. I am now short the EuroCAD, and I'm sitting giving you a presentation. Why am I short the EuroCAD? I am short for no reason. I mean, we are short the EuroCAD. I want to show you the trade that we have in the EuroCAD. Let me do it here. We are short the EuroCAD, and the guys that are with us in Hi Joma, no, I mean, forgive me, Roma, you need to do things the right way. Anyway, the EuroCAD, let me show you the trade that we had in the EuroCAD. This is our position trade. We are short from 152. I'm going to put it without any formatting or anything. I'm just putting it on. And you will see we're short from 152.80. This is where we are short the EuroCAD. 155. Okay. This is the short from 155 up till 136. So you got about 2,100 pips, about 2,000 pips on that trade, on our position. But right now, on a day trade, I am short the EuroCAD. I'm short the EuroCAD only for one reason. Is that because they have come up with this fantastic news on the euro that they have resolved the issue with Greece. And take a look at the daily chart. Is that, just look at this candle, guys. I mean, I'm sure all of you are good about candlesticks. You know that this is a bad action. This is not good action. This is bad action. So if it's bad action, it's a no-brainer. All what the news comes out, you wait in for half an hour, 40 minutes, then you find what the direction. If it's going up in the direction of the news, you buy it. If it doesn't, then just take it short. And I'm sitting with the position, and I want you to see what time I took it. I took it this morning because I was expecting to come in early with you guys. But I took it this morning, and it's a live account, and we're just sitting waiting it, and I'm not even concerned. Why? Because I am following the set of rules. That is what we call rule-based trading. You set your rules. I know exactly why I'm short. Okay? I am not waiting for a moving average price to come down to a moving average. I'm not waiting for a black box to tell me. I know exactly because I'm trading the human beings, the guys that rushed to cover their shorts. Now they're getting caught with their pants down, and now they have to scramble to get out. And in this case, they have to pay me to get out of that position. And I'm sitting. And the longer it sits like this, this is a patience game, JP. Why? Because it's a frustration game. If you go long, let's say you, JP, you buy something. You bought the euro today at 137. Let's say you bought it here at 137 this morning, and it went up to 137.50, and now it is coming back. Now, based on price behavior, which means nothing more than human behavior, you are sitting now, JP, you are hoping that the price will go back up so that you can recoup or make more money. The longer it stays below your entry point, the longer it stays below 137, the more frustrated you would become, the more anxious you would become, and the more you would be starting to talk to yourself, I need to get out of this trade, I should have taken my profit, I'll wait 5 more minutes. I will wait another. And the longer you stay, the more frustrated you will become, and the more ready you are, the more you become ready to exit the trade. Okay? So for me, if I go short and I'm not losing any money and I'm staying there for the long time and still my position is making money, that means, and I'm following my rule. I took this rule based on price behavior. Exactly. I'm sorry to say I didn't know, but we're following the rules. The longer I stay, the more frustrated the other side of the trade, the other guy on the trade gets frustrated, and the more he is going to, bang it and get out of the trade, the more I will be able to capitalize on it and make more money. So that is a frustrations game. It is a patience game. And again, these are all techniques that you have to be trained upon so that you understand and evaluate and you can see what is this is the bell that New York Stock Exchange has opened, and you can take the trade. So as long as it's sitting here, it's not. I'm trying to wait for the data. I mean, today I'm not having too much luck with the data on my screen, but I would have loved to showed you. But we took the trade, as you can see here on the screen, we shorted it at 136.91. I shorted it at 136.91. That was the trade that I took this morning. You can draw a line on your screen and you can find out. You can see that the price is 136.91. And as long as it's sitting there and it's not making any difference, then I'm fine with it. Now you also look at the radar screen. I can show you how we use the radar screen also while we're having this conversation. These are all the euro pairs right there. These are all the euro pairs. And these are numbers that I can gauge the strength or the weakness for the currencies that I'm trading. And you can see that the euro CAD is what it says halfway through is 50%. So it's not really strong. It came back. The euro Aussie is weakening. It has come back a lot. The euro pound the euro was up. When it says 80% here, the euro pound, this means you can look at your charts and confirm what I'm saying. And this is why all what we need is just to look at the radar screen. We can gauge exactly what happened. Now the euro pound is just back now to scratch in the morning. Just back to zero. The euro pound, because now it was 99%, it is back to zero. It's a waste of time. Now we're ready to go short the euro pound. Because now the move, this tells me now that the reaction to the news is zilch. Once the news came out, it had a big move up. Now it came back to the origin of the point, to the starting point. So this means that's good news, and now it is bad action. So now I'm going to get ready to short it. The same thing with the euro Aussie now is weakening more. It is coming back 70%. It is 80% from the high. It is weakening more and more. So now I am looking at it is weakening more and more, so that in this case, again, we're looking to be short. And let me see if I can get lucky and get the euro pound up here. As you can see now, as I told you, it came back to scratch. It came back to the starting point. You can see on the daily chart it's coming back to the starting point. So again, this is one of the techniques, one of the strategies. It wasn't particularly planned to show you this today. I was planning another, but since I'm having this technical difficulties, I'm just showing you those trades. Anyway. I'll just turn it off so that you can see what we're doing. So I don't want to. There is your euro pound. That is the gap in the euro pound moving sideways. Now it came back. When it comes to zero, This means it came back below the market side. See? And this is because we took it from the radar screen. That is your radar screen. You see that there's nothing. It was positive here going up 90%. And when it came back 90%, and now when it's blank like this means it came back inside and below the market side. So now I am ready to go short. I am planning to go short the euro pound. And if you look at, again, at the radar screen, you would see here what, that's what the radar screen is saying to us. Mike, we need to go short because now we're having a reversal. Okay. And it's just flipping out. The euro yen, we're looking short. It's a very strong short because it reversed on the opposite side. And now all of these are techniques for us to be prepared to look for opportunities so that we can short these instruments. Okay, so since I'm unable, so basically that is, and on Sunday we plan our trades as no, Federico, it is not. This is okay. To answer your question, Ricardo, look at this here. Look at the long point and the short point. This is the euro yen. And this is what we plan every Sunday in the online trade planning session on Sunday. We decide what is my buying point. So we're buying the euro yen at the long point is 124.37. And we have what we call the structure point, which means the trend changing point at 125.22. So if they are green like this means we are already long. If they are white, then there is no position. So for example, we're long the euro pound at 87.15. We're long the euro yen at 124.37. We're long the euro dollar from 134.36. We are short the CAD, the dollar CAD from 102.50. We are short the dollar Swiss from 106.35. All these are positions. And these are the ones we trade every week. I mean, every single position that you see here, we take it live every week. So we do our trade planning session on Sunday, and then we take these positions live whenever they come, whenever they're triggered, we take those trades. And this is our position. You see what we're long, and just by looking at let's say the euro yen, you're long from 124.37. It is now 127. So it's about a couple of hundred pips or so. So at this moment in time, if you are looking at buying the euro yen right now, you would only want to buy it if it gets above the 127, Ricardo. How do I know? That's part of the training that you have. We go through, Arash, a pullback or not a pullback. This is part of the rules. As a trader, Arash, I mean, this is for you. We don't predict. If I tell you I know that this is a pullback, or I know that this is a trend decline, okay, absolutely, we should be trading with the trend. We should, if the trend is up now, then it's a pullback. That's one way, simple way of doing it. Absolutely, you're absolutely correct. So you have to follow a set of rules. And so why should we go short? Because that move to the upside without, okay, just a second. I mean, this is, I can't tell you the logic of, but, Arash, that move to the upside was the result of a news event. Prior to this news event, Arash, that is This is what's happening in the euro yen. So if you're looking at the euro yen, the major trend is to the downside, and you should be short. That is the answer. Why should you be short the euro yen? Because it's in a major downtrend, right? But the move lately to the upside was a result of a news event. So when you're trading today, you're trading a specific event. You're not trading with the trend. If you're trading with the trend, then you answered yourself. You want to be short. Correct? If the market is moving up, now it is why is it moving up? Okay, we know why it's moving up. It is moving up because of Greece. Okay, it should continue to go up. If it doesn't continue to go up, then what happens? Then the original trend, the Arash, should continue and resume to the downside. Okay? Coco, this is part of, it's not revealing any secrets or anything. This is, again, we are trying, this is when you look at the market, you see your bid and ask, and we try to find the number of trades that goes on the bid. How many, what is the volume that goes on the bid, and not volume, but the number of trades that goes on the bid and the number of trades that go on the ask. And we use that to give us, to identify which way one of the biggest things about trading today and algorithmic trading, and one of the major reasons that a lot of people who are using indicators are not being successful, is the following. And I'm sure some professional traders are with us in the room today. The biggest thing in trading today is anonymity. Anonymity. Everybody wants to hide his or her name. UBS doesn't want to show UBS. Deutsche Bank doesn't want to show that Deutsche Bank is coming into the market to buy. Paribas doesn't want to show that they're selling. They want to hide. No, it has nothing to do with pivots and all that, blah, blah, blah. We don't use it. We don't take anything divided by 2 or multiplied by 3. Go down. That's not exactly, it's what I told you. It took us 3 years to come up with this, and it's not, again, it's quite simple. It comes from the floor. These guys, and if, for example, if you look at, they tell you in the stock market, for example, looking at level 2 Nasdaq. I'll give you an example what I mean. Let me pull up. No, it's just at the point everybody, Coco, is trying to think that we're taking these numbers and we don't. Well, contact the office, Judego, okay? Get in touch with James. Let me show you something. I'm going to put a market depth. People tell you, okay, for example, the direct access, and I'm going to look at in the stocks, for example, the hammer and whatever, all this lovely stuff. But if I put for you something here, like I'm just putting Apple, just to give you the stock. What's account number? Let's see. Okay. Okay, take a look at this. All right. You can see here, these are the bids, and these are the asks, and you can see the size. There are 288 contracts over here to be sold at 190 at 1,194. Here there is 1,200, and look at the speed that this thing changes. Now, everybody here, all what they show you is the CME. They don't tell you that this is who is the person behind who wants to buy or who the person that wants to sell. Because if I see that Goldman Sachs is buying, all of us want to buy, because I'm sure Goldman Sachs is the biggest trading company in the world. They have to be right. So we want to jump on their back. But Goldman Sachs doesn't want us to ruin their trade. If they are buying, they don't want to show us that they're buying. They will not. We are all business people. So anonymity is the biggest thing in the market today. And therefore, if I put the time and sales, this is what you see here. Let me show you this now, the time and sales. Look, this is the time and sales. You're looking at the bid and the ask. Look at the selling. When it's red like this, this means they're selling. Now they're buying. If you're going to keep on watch this all day long, good luck at the level, and you don't. All the selling is 1, 2, 3, 5. You see the onesies and twosies, right? But 50 buys. 50 buys. This means that even though they look like as if they're selling, but they're selling 1, 1, 1, 1, 1, 1, 1, 1, and then they come in and buy 100. They sell small increments, but a big number in small increments, but they're buying 16. They're selling ones and buying 16. They're buying 4. So you see that they are, at the ask, they are buying more, and at the bid, they're selling less. And that is basically the essence, Coco, of identifying the market side. I look at the buys. So now I know they're buying because the market side, exactly. So the market side is actually counting, if you will, all this kind of stuff for us. And it's telling us which way the market is. So if I put, because why? Because we have been, I mean, my son, I tell a true story. My son had a seat in the New York Stock Exchange. I was in the new board, and my son was in the New York Stock Exchange. He was the broker for the California pension fund. And they would send him onto the floor, and they would say, Karim, his name is Karim, and they would say, go in and sell 100,000 shares of IBM. So he would take his order book and go down to the floor, and he's selling 100,000 shares of IBM. Everybody knows that Karim is the broker for the California pension fund. We have a seat, we're on the floor, and he goes in and he starts, selling 1,000, selling 5,000, selling 10,000, and he starts working the order of his client. After a while, we discovered that what happened was the California pension fund does not really want to sell 100,000 shares. They actually want to buy 100,000 shares. So when they send Karim into the pit, go Karim and sell 100,000 shares, the message he's bringing to the floor is that not Karim. Who is Karim? Karim is just a broker. That the California pension fund is selling shares, and Karim now is on the pit selling 100,000. This is the first order. How many hundreds of thousands of shares he's going to sell, he has in his back pocket. So the people don't know, but they assume that the only reason he's in the pit is going to go short. So everybody sells in front of Karim. Everybody sells. They hit the bid in front of Karim. And when they're selling, who do you think is buying on the other side on the computers? The California pension fund. Because the more they sell, the price comes down, and they are able to buy it on the other side. That is the anonymity, and that's the games they play. So when I tell you take this, and I will show you the level 2 NASDAQ, and now I'm going to teach you how to trade with it and how to use who's the hammer and who's the nail, it's over. This stuff is finished. It was like maybe 94, 95 when the source came out in the beginning. Now they're using the computers, they're using the technology, they're using every single indicator out there to trap us. If I know that you're going to buy at a moving average of 25, crossover of 50, then I'm going to buy it at the crossover of 20, 35, and I'm going to be ahead of you. That's it. You have, using that stuff, you have not our game anymore. Game we play is we do not give these guys our advantage. This is a serious game now. This is now a market where they're using every technical indicator. They're using every technique. They're using the newspapers, everything in order to take advantage of it. Again, it is not as dire as I'm saying. It is the truth. What I'm telling you is the truth. But how can we take advantage of that? The way we do it is that we're not going to play this game. Okay, I'm going to trade, but I'm going to trade with tools that these guys do not know. I'm going to play this game based on my rules, on the rules of human behavior, on the rules of what creates the price. These guys, all what they know is how to interpret a moving average, but they do not know how to interpret price behavior. And this is the constant thing in the market for the last 5,000 years, is the way you trade and I trade. And this is how we trade this market. So these guys cannot program. They cannot take advantage of it. But you and I know, if I put a moving average over here, I know exactly where the moving average is going to cross. And I can take advantage of it. So if I put two moving average, I'm just going to put it quickly over here. I can, whatever the moving average I choose, I can see the crossover right there. There is a crossover and I can plan it. Okay, here is a crossover and I know what value the computer can program this value and find out, okay, they are buying it if it crosses over here. And they are setting us, they would buy it, they would be able to push the price for a short period of time, 10, 15 pips. So now your indicator gives you a buy signal. And if you're buying, who are you buying from? You're buying from them. They are selling it before you. They buy ahead. They would buy it over here. Let me show you. They would, this is what they do. They would come here, where I have this. Right there. See this move here from 126? Let's say 126.73, and they know if they buy it, then the moving averages is going to cross at right there. This is the crossover of the moving averages. So now remember, these guys trade size. They trade large amounts of money. So they know if they start buying and they lift the ass, buy, then at 126.73, then you guys are going to buy it at 126.80. They make 10 pips on 10 million bucks. Everybody's happy. Okay, somebody. Okay, we were finishing in 10 minutes. No problem. With that, guys, I'm giving a heads up that we're closing. But this is how the game is playing. It's the truth. If you have enough money and if you can push it, and this means you are sitting ducks. If you're waiting until you buy it over here, you're a sitting duck. Okay. Now, if you have any questions, for the last, got 5 minutes to go because there is another presenter. If you have any questions quickly, I'll be more than happy to answer it. If not, feel free to send me an email. I'll put my email for you, or send it to info@SpyGlass Trading, and I usually am good at answering the email. Send it right there, info@spyglasstrading.co, and all right. This is something that we did for you guys. This is part of the what is the mark side indicator you were, which this is this blue line here, Ash. See this? Let me move the. This is not a moving average, because some people confuse it with the moving average. It is not a moving average. You see which is this little squares here, little crosses. Every session, if they're trading London, after London is over, New York opens, it is cut. It is not continued because every session is unique. Okay? So we're counting the bid and ask of this session, and then we're counting the bid and the ask of the other session. Anyway, if you guys are in London, anybody of you who's in London, you are very welcome to come to our office. We will give you a computer like this and the software, and Michael Douglas or I will teach you a couple of trades, and you can start playing with the software and see how you can take the trades. So you're very, I mean, in the office we have a big trading room with about 12 computers. We can only see 12 people at the time, so you have to make a reservation because we have a waiting list, and we will give you a day. You can come in and you sit in front of the computer and you can play and experiment. It's in London, and you can if you cannot do it online, if you cannot come in do it, if you are in Paris, you can do it online. They will give you a desktop control. You can control the screen, and yeah, you can say welcome 2 hours, or you can do it online. Okay. What else? And basically, you can spend a couple of hours getting used to the software and see how it works for you. Somebody, no, Thomas, now you have to say it's time to get off take some action. Somebody, eSignal, yes, it does work on eSignal, but you have to use a different platform of TradeStation. You have to use multi-charts. Yes, but it does work on eSignal. Yes. All right, guys. I want to thank FX Street, and I want to thank Maud, and I want to thank you all for your patience. You have been very gracious, and thank you. And if you're welcome to join us at the Sunday session, you would see. So thank you very much. Thank you, guys. I appreciate your. Have a lovely week, and hopefully we'll get. Okay. Thank you all for attending. Thank you.